Hey everyone, welcome back to the channel. I'm Dean, and I'm back to share my decade of experience in Toronto's commercial real estate as the founder of GTA Commercial Brokers. Let's strategize, acquire, and grow your property vision. Today, we're diving into the latest trends in Canadian commercial real estate for the second quarter of 2025. Whether you're an investor, a real estate enthusiast, or just curious about the market, this update is packed with insights that matter. So, let's get started. First up, the big picture. Despite global uncertainty and shifting trade dynamics, Canadian commercial real estate is showing real resilience. The Bank of Canada has held its overnight interest rate steady at 2.75%. This move aims to balance inflation pressures while dealing with economic volatility. What does this mean for investors? Well, it helps keep borrowing costs more predictable and allows the market to find its footing. Let's talk capitalization rates, or cap rates, basically how investors measure the return on a property. The overall cap rate across four major real estate asset classes in Canada is steady at about 5.9%. But looking closer, there are some interesting shifts. Suburban multi-unit residential cap rates fell to 4.6%. Why? Strong demand due to housing affordability pressures is pushing those returns tighter. Tier 1 regional malls have seen cap rates rise to 6.36%. Retail's facing challenges, so investors want higher yields as a buffer. Single-tenant industrial properties saw cap rates drop slightly to 5.91%, though performance varies by market. And downtown Class AA office buildings? Their cap rates increased to 6.7%, showing there's a flight to quality. Investors want the best office spaces despite some overall office sector worries. Where are the hotspots? Halifax, Vancouver, and Toronto have emerged as the top markets that investors are chasing because of their stability and growth potential. Within these markets, investors are concentrating on food-anchored retail strips, especially in Vancouver and Montreal. These are retail spaces anchored by popular grocery or food tenants which tend to have stable foot traffic. Suburban multi-unit residential properties are again benefiting from housing demand. Multi-tenant industrial properties are especially popular in Vancouver and Ottawa for their flexibility and steady income. Talking investment volume, 2025 kicked off strong. The first quarter's transacted volume rose 10% year-over-year to $11.7 billion. But expect things to slow a bit in the second quarter due to the rising costs of capital and asset repricing. Even so, buying intent improved across 75 of 128 property market combinations compared to the first quarter. Investor sentiment is showing a clear rebound. The Commercial Real Estate Finance Council tracks sentiment, and it climbed significantly in the second quarter compared to the first. This means investors are more optimistic, even with cautious market conditions. The Canadian government is also playing a role. Their One Canadian Economy strategy focuses on removing trade barriers between provinces, boosting innovation ecosystems, and attracting global talent. The goal? To reduce risk from external shocks, like geopolitical tensions, and fuel productivity. Now, what should we watch next? Well, geopolitical factors like the United States-China trade relationship still dominate investor concerns. Plus, Canada's evolving immigration policies could impact workforce availability and economic demand. So, what does this mean for you if you're an investor or just watching the market? Focus on resilient, income-generating properties, like suburban residential, stable retail anchored by food tenants, and flexible industrial spaces. Also, keep an eye on interest rate movements and be prepared for some market flexibility, especially in the industrial sector. Alright, that wraps up our second quarter 2025 Canadian commercial real estate update. If you found this helpful, hit the like button, subscribe for more real estate insights, and let me know in the comments. What's your take on the market right now? Reach out to me and the team today. Let us assist you in finding the ideal space for your venture, because a great location is the foundation of every successful business. Thanks for watching, and see you on our next video.